Hey everybody, welcome to the Fundamentals Investing Podcast. Earlier tonight, data from the FFIEC dropped, highlighting SoFi Bank's Q2 numbers, including a whopping deposit growth, as well as net interest income and non-interest income. I just hopped off the SoFi Weekly podcast where we discussed this, and one of the major debates was whether these were yearly numbers or quarterly numbers, and I found an answer that is definitive to that question. Let's jump into the video. So for this video, a lot of it is just my raw thoughts in terms of the numbers. We're going to be taking a look at that FFIEC report, and keep in mind that this FFIEC report is a quarterly occurrence. It was released earlier tonight, just about half an hour before we jumped onto the SoFi Weekly podcast, after the markets had closed. Keep in mind that SoFi reports earnings before the markets opened on Monday, so there is no market trading when this report is released until SoFi actually reports earnings. But the findings give us a hint as to what we can expect in terms of SoFi's bank's earnings specifically. Now, deposits was really the key number here. SoFi, I believe, added $3.2 billion in deposits. Okay, so here we can see the deposits at 3.2 billion. This is absolutely massive because it shows that SoFi actually added more deposits than they were expecting. If you'll remember, in the JP Morgan Fireside Chat as well as the Q1 earnings call, SoFi was saying that they were going to add around 2 billion deposits, and just judging from this, it seemed that the number was closer to 3 billion that they added in deposits. So absolutely massive to see. Now, the main question that we want to answer on this forum is this quarter over quarter numbers, or is this year-to-date numbers? Because when we looked at non-interest income and net interest income, here on page 8, we can see the non-interest income and the net interest income. Right here, net interest income is 431 million. Now, in the Q1 SoFi report, you can see that the company at the end of January reported about 201 million in terms of net interest income. And so the idea is, if these were quarterly numbers, then this would be over 100% growth, and that is staggering if that were the case. Same deal for non-interest income. 301 million is what's given in the FFIEC report that just came out tonight, whereas in the Q1 numbers, the actual reported non-interest income was 136 million. Now, the main question here is, how do we determine if this is year-to-date numbers or if this is quarterly numbers, and then deduce from there further? Let me share my screen again. Okay, so this might be a little bit difficult to understand, but I promise it's not that hard. Here I pulled Q3 of 2022, and then here on this side I pulled Q4 of 2022. And what we're going to see here is we're just going to see the non-interest income. So in Q3, non-interest income was 344 million. And then in Q4, the non-interest income was 489 million. Okay, so what are we trying to get out of that? Well, so let's just do some super quick math to find out. 489,762 subtract Q3 numbers, which is 344,673, gives us 145 million. And look at that, I pulled Q4 of 2022, and look at what the number is, 145 million in non-interest income. So what does this mean? This means that the FFIEC numbers are year to date, they're cumulative. So when we're looking at the Q2 FFIEC numbers, the one that just came out, earlier tonight, what we have to do is we have to actually subtract Q1 numbers for non-interest and net interest income. Let's do that right now. So we know non-interest income in Q2, the numbers that just came out earlier tonight, is 301,549,000, and we subtract that by the non-interest income that we have in Q1, which is 136,034. And this is really the number that we have. So 165,515. Now let's divide that by 136,034, and we're gonna get a 21% increase quarter over quarter from Q1 to Q2. 21% is the increase. Definitely not as good as 100+%, but now we definitively know that around 21% is what we can expect the quarter over quarter increase for non-interest income. Let's do it now for the net interest income, which came in at 431 million. So let's do 431,709 subtract 201,047 equals 230 million. Now we divide that by 201 to find the rate of change, and we can see that around a 15%, 14.7% increase quarter over quarter. Now these are very good numbers, but these are not the numbers that, in the SoFi Weekly podcast that I just hopped off of. These thoughts are still very, very raw, so bear with me. We were looking at the potential for SoFi to even be inching towards profitability or even have crossed that threshold into profitability if these were actually quarterly numbers. But in fact, they are year-to-date numbers, as was proven by this video. So net interest income grew about 15% quarter over quarter, whereas non-interest income grew about 21% quarter over quarter. And then of course the other number is really loans and leases held for sale, 13.79 billion on that front. I believe the net increase quarter over quarter was 3.2 billion. If I'm mistaken, I'm gonna put the correct number up on screen, but I believe it was around that same range. So definitely very bullish because it shows that SoFi had more originations than they had expected by about 50%, right? Because they were tracking for 2 billion in net new originations for Q2. So that's obviously very, very bullish. I just wanted to share these numbers and share the corrected numbers in terms of this FFIEC report. I'm going to be digging more into it over the weekend and leading up to that earnings on Monday morning. If you enjoyed this video, this is the Fundamentals Investing Podcast. Thank you so much for listening. Make sure to follow us Monday morning when we talk about the full SoFi report, 7:30 a.m. We're going to be digesting the actual numbers, not only SoFi Bank, but all of their other business segments as well. Technology segment, members, net new products, revenue numbers, in addition to listening to the call at 8 a.m. in the morning. So definitely join us there, and I hope you enjoyed this video. Thanks.